But welcome everybody to our April edition of our Cielo workshop series. So as a reminder, we do these every month. We get different guest speakers. We cover different topics. It's someone other than me speaking. For a lot of you who've already been Cielo clients, you've seen me talking a lot. So it's nice to have someone else who's been in the business or has worked with small businesses present a topic. So before we get started, I do want to do a quick intro for some of you who are not familiar with Cielo. This might be the first time that we've actually attended any one of our events. So Cielo, who we are and what we do. We stand for Committee for Innovation, Entrepreneurship, Leadership, and Opportunities. We officially launched in 2015, but we've been helping clients since 2012. So we've roughly been around for about 10 years. And we're small, but we're growing. We're small but mighty, I would say that. We're a nonprofit organization helping aspiring entrepreneurs become business owners. Essentially what we're doing is we're trying to help those who want to have their own business or gain an extra stream of income. We want to help you get there, right? One nice thing about being a nonprofit and being part of Cielo, we don't charge for our services, and our services are available at no cost. So our goal is to help you build and develop the entrepreneurial mindset needed to help you achieve success. We provide the resources and the guidance, and in reality, all of you provide the hard work and the passion. So in terms of what we do and services that we offer at Cielo, we do have what's called a small business development training program, right? It's where I've met a few of the familiar faces that we have on here today. That's a 6-week program. We actually just started one yesterday. It's 3 weeks of live training and 3 weeks of one-on-one coaching to help you develop your business idea or your actual business if you already are in business. We do a monthly workshop series just like this one. For all of you who are already on our email list, you'll know about our upcoming workshops and what topic we'll cover as well. We do offer one-on-one small business coaching, which is part of the small business development program, but also for other businesses that do want to have a conversation with us and may need a little bit of coaching. We can actually make an appointment and speak to these businesses as well. For Cielo clients, we actually have a micro grant program for Cielo business clients who've participated in our programming. We actually have some of our Cielo award winners, a few of them on the call today. So it's always good to see them. And ultimately, or lastly, we also try to connect our small businesses to resources and services that are out there as well too. There are times where we don't have all the answers, or there's someone else who might have a more appropriate expertise. So we want to make sure that we connect them. And we always want to be basically that person, that organization that you can always ask questions to. So that brings us to why you're all here today. So we have a guest speaker today presenting on managing cash flow for small businesses. And today it's actually from our partner at Pacific Premier Bank. We have Christine Elia, am I pronouncing that right, hopefully? Who is a VP and Senior Branch Manager. So Christine, it's great to have you here with us. And you're going to be presenting on a topic that a lot of small businesses have a lot of questions on. So we're very excited for this. And whenever you're ready, Christine, I'm going to go ahead and pull up your screen. And then if you want to get on and maybe just introduce yourself.
Thank you so very much, Alex. And I appreciate the opportunity to being here with everybody. Thank you. So welcome to Managing Cash Flow. Taking this class is really an important step to building a better financial future for you and your family. So I commend all of you for taking the time, and I hope that it's going to be helpful. As a small business owner, it's important to know how much cash is moving in and out of your business. You need to think ahead in order to meet financial obligations and run a profitable business on a long-term basis. This class introduces some basic cash flow concepts that can get you started. And again, my name is Christine. I work for Pacific Premier Bank in the South Bay in Redondo Beach. I've been in banking for 30 years or so. And it's my passion to really see small businesses grow. And that's what we're here to help you with. So if we can get started, one of the best ways to learn, and this is just, I just call it a little ground rule. One of the best ways to learn is from one another. So you probably have some great ideas to offer. You may know of a process that works well for you or some pitfall to avoid. So please speak up. Also, if something is not clear, please ask questions.
All right, can everybody see the screen now?
Okay, we can go to page 6, please, Alex.
Alex, are you going to send us this or should I screenshot them?
I will send it out.
Okay,
Yeah.
thank you.
We'll go out to all the participants.
All right,
But they
thank you.
have the pre-work, right? They have the pre-work. I mean, the
Yeah, and they'll also get,
Okay.
for the
Got it.
majority of you, I sent out, at least for everybody who was registered, at least I think an hour ahead of time, should have gone a workbook for your reference as well too.
Oh,
All right, there we go.
All right. So what I'd like to do, what I'd like to do is to actually use a realistic example to review a new business owner's cash flow management decisions. As we review Bob's cash flow issues, you may find that these concepts relate to your own cash flow questions. And same may not, but you can get the understanding and feeling, hopefully, from this scenario that we're going to use. So if I may share with you, I'll share with you Bob's little Wired Cup Cafe, I should say. So Bob recently opened a new bakery cafe, the Wired Cup. The cafe has great location in a small college town. To get started, Bob invested $30,000 of his own money and received a $20,000 loan from a commercial bank. He spent $45,000 on startup costs, leaving $5,000 to run the business. The Wired Cup is already popular with students, university staff, and neighbors. Everyone loves the coffee and baked goods. A college dean had started to order croissants for the faculty dining hall as well. And I'm sorry, I'm trying to. So Bob is building a great new business. However, Bob has concerns. He has not yet paid himself, and that's a problem. He wonders when he can. The $5,000 that is almost gone. Given that his key customers are students, he assumes many will go home over the holidays and breaks and the summer. So questions Bob is now asking himself, which is being proactive, is how will he pay his bills if there are fewer customers during the times where the students are out? Will he have enough money to ramp up again in September? Should he buy in bulk to reduce costs? Will suppliers allow Bob to buy on credit, or does he still have to pay cash? So the good news in all of this is that Bob is thinking ahead again. He has time to find some solutions as we review the Wired Cup cash flow issues. You will be able to apply those concepts to your own business. And if you have questions, please, again, let's make it interactive and let's share it. If I can have you go on the managing cash flow page.
Sure.
That's page 8, please.
And one thing I was going to add too, for those of you who did get that email regarding the workbooks, I sent it around 3 o'clock. I believe it's around 3:15. If you're able to pull it up, and it would make it a little bit easier to actually see the cash flow, because I know I'm not able to share both screens. But I encourage you to pull it up. And if it's just hard to right now because you're on your actual phone, then just refer to it at the conclusion of the workshop when you have time at home.
So when we're looking at the workshop, excuse me, when we're looking at this worksheet here, the opening balance sheet here tells a story, right? It says how much money Bob had to start his business, how he financed it, what he did with that money, and how much was left over to run his business. The balance sheet tells us that Bob invested $30,000 of his own money or owner's equity, and he borrowed $20,000 from a loan. The $20,000 is over 5 years with an 8.25% interest rate. In year 1, Bob will pay back $3,371, if I see that correctly, yeah, of principal, and will pay the remaining balance of $16,629 in 2 years through year 5. If you do not have the necessary capital to start your business, you have two options really to get the capital that you need. One of them is the equity, getting the equity that you need from either friends, family, business partners, investment in your own business. They provide you with the cash. You give them equity or a piece of the business is what a lot of small business owners do. And then the debt is the money that you borrow, the money from family, friends, or a lending institution, such as a bank. You do not need to give up the equity or ownership, but you do have to pay back that loan if you choose to have debt. You will pay back both the principal and the interest. There are many types of lending or borrower options also that one can choose from to borrow on the small business. So I just want to share a few notes about debt. It takes really some effort to obtain a small business loan. As part of the process, you will need to provide a business plan, particularly on a brand new business that doesn't have history or a record. So know that your credit score is the most critical part in this process. The higher your score, the lower the risk is going to be for your creditors, right? So that's something that you really need to be watching after. And I really stress that point because credit to me, it shows who the person is that's about to borrow. Is it somebody that we're going to be able to lend and to trust to lend that money or not? So we have to be very careful, even in your consumer, own financial world. Credit shows you a lot about who the entity is and who you are as a person. So know your credit score. Know what that is. A lot of agencies out there show you your credit score for free as well, or have that information for you available for free. So banks have different criteria for lending. So I would really speak with your local banker before you need a loan. And I'm going to stress before you need a loan, because a lot of times what I see at work is customers come to us, or business customers come to us when they need the money. But at that time, their credit may have already been affected because they didn't pay their obligations on time or what have you, or they need it right away, but it's not available. So there's lots of different options that we can do again, that we can give you a loan or a line of credit before you need the loan.
I have a
And
question.
the stronger,
Oh, I'm sorry. Tell me your first name again. I'm sorry.
Christine.
Christine. So, one of the things that I think is missing in our education is teaching high schoolers about the FICO score. And I mean, that should be just like the, 101, and you got to know this, people, because, this is really important. But is
Absolutely.
it really, these companies that say that they can raise your credit score, are they even viable? Should you stay away from them? I've been trying for 2 years to bring my score up, and I think the highest that I got was 701. And then of course now it fluctuates a little down, a little up. I'm paying everything on time, but if I make an inquiry, then it takes it down a little and all this stuff. But I have considered going to a company to see if they could help raise my credit score, because we were trying to buy a house. Is that something that we should even be considered, or is that like not a good thing?
First of all, I'm gonna address your first concern, because I absolutely agree with you that high school students today graduate from high school, don't know how to balance a checkbook, don't know about credit, don't know about savings and so forth. And personally, what I like to do, and I got myself in that trouble when I first graduated high school, went into college and all the banks were there offering credit cards and checking accounts, so forth, right? So I totally agree. And what I like to do is, what I want to do to give back is I go to high schools and I educate them based on credit, savings, and so forth. So yes, I agree. And I do believe that the responsibility also falls on us as parents, maybe as well, that we should also educate our kids and or the young youth, and to give back and show them what that is. But going to answer your question, I do believe that is something that you could look into. Some companies are reputable and can help you. Sometimes you don't need to pay a company to help you, and maybe you can get advice from, again, your banker or a CPA or your accountant as well to help you raise your credit score.
And does Cielo have a company that they refer out to, or no?
Yeah, I'll touch
Uh,
on that a little bit. So for those of you who, and actually, Jackie, you bring up a good point. So I agree with you 100% on financial literacy. And I used to do that actually, my previous job. I was also a credit counselor. So stay tuned because we are going to be talking about that soon. But yeah, I do partner with, we actually partner with different organizations out there. My old organization, Operation Hope, is one that does do credit counseling for free.
Hope,
So that's one.
HOPE,
Operation
HOP.
Hope, HOPE, yeah,
Okay.
.org. And I can always give you more information down the site as well too. But that is an organization that was basically the mission, right? To get everybody to a 700 credit score through financial counseling. So that's one. And going back to what you had mentioned too about some of those companies, I echo exactly what Christine mentioned as well too. Some are reputable, you can actually get it done, but if you can find one where it's free, right? Better, right? And you can kind of tell who knows what they're doing or who doesn't. You're doing the right thing by asking. So there are people out there who do focus on this and will help you get to that credit score. And again, what Christine is saying is spot on. I mean, I used to work in the bank too, and your personal credit score, your personal FICO score is very, very important to get approved for a loan. And in fact, when I was a credit counselor, there was a lot of lending institutions and banks that would actually work with us at Operation Hope to try to get the credit score, to try to rehabilitate it, right, to a place where it is a lendable area. So all good topics, yeah.
Thank you.
And when you're getting a loan for your business, I will also say be prepared to personally sign off for the loan. Again, because you're a small business owner, maybe new in the industry and so forth, the banks may not just do it based on your personal credit, or excuse me, on the business credit. So they will ask that you personally sign off on it. If a business is unable to meet its financial obligations, you will be held responsible. Also be prepared to pledge collateral if you can. Whenever you pledge collateral, you're actually decreasing the risk, which means less risk is a lower rate.
Could you give me an example of a small business collateral? Because I mean, I know like a car is a collateral, but what would be a small business collateral?
So I can even mention maybe like a secured credit card for collateral.
Oh,
Yeah, they can also do that as well. And I mean, again, you need to discuss it further with someone, a banker or an advisor, but collateralizing, I mean, using your own money as a credit card could be a way for you also to improve your credit score, as long as you're making the payments on time. Or equipment, if you have equipment as well in your business, that can be used one as well, other than an automobile. Okay, so one last note, manage your credit cards to avoid high fees and interest. In general, business credit cards are more expensive than other forms of business credit cards. So if we can go on to slide 10, please, Alex. I can't see that. There we go. Okay, thank you. So in total, Bob had $50,000 to spend to open the Wired Cup. Looking on the balance sheet, he spent $45,000 on equipment, materials, and other assets as indicated on the balance sheet. The $29,500 fixed assets and $15,500 for current assets, a total of $45,000. He had $5,000 cash remaining to run his business, the 50 minus the 45,000. If I were Bob's lender, a potential business partner, or a vendor, I would look at this opening balance and sheet and ask the following questions. Has he invested enough of his own money in this venture? Did he finance the business wisely? For instance, does he carry too much debt? The terms and time requirements for loan repayment can make a huge impact on the cash flow that the business has. Did he wisely spend the $50,000? Is there enough available cash left over to run the business? Is $5,000 really going to be enough to carry him through a 6-month period, which is an average term in which lenders are looking at for a business not to be profitable and still have liquidity to pay back? So since we don't have time to discuss all these questions and the answers in detail, I'm just explaining that an opening balance sheet tells a story. A balance sheet tells a story, but it's just the first chapter of the story. So the story continues on into cash flow statement. Are there any more questions about the balance sheet by anybody?
Well, I would like to say that I've been in business for 30 years and I never did this. I'm just
Balance
a
sheet.
horrible example of, by the seat of my pants. So I'm so happy that even at, 69, before I die, I am going to have a clean and healthy spreadsheet like this, because really and truly, in everybody's eyes, we're successful, but this is the success. This is the real story. It's not the smile on your face.
Right.
It's not the people saying we love your product. It's your books.
Yeah. If you want to be able to see how much you're making, you have to have it on black and white and show the lenders, right? Or yeah. So I appreciate you saying that. And most businesses, most small businesses don't have it. And thank you again for acknowledging that. But it's really a good way of establishing and running your business for it to be profitable and feel the success that comes with it as well, of course.
I want to add real quick,
So-
Christine, for everybody who is, taking the training, right? The one that we offered at CLO, and for everybody else too, at least for those specifically who went through our small business training, what does this kind of look like? What were we working on to kind of mirror this when we were meeting and I was having you do homework and everything?
Would it be the profit and loss spreadsheet
Yeah.
that we did?
The P&L, right? The profit and loss. Granted, Albert had it too, profit and loss. So we would work on a projected one, right? But the main goal was what's coming in versus what's coming out, right? And we were doing it monthly. And I know that actually, in fact, I remember Adriana, we didn't even work on this when we were doing it.
Yeah,
I had
right.
to do it later.
We did it.
But this is like the daily one, right? This is a snapshot of what your business is looking like now. So you can see why it's important and why we have these pre-opening expenses. And ultimately, like what Jackie said, it's the health of your business. It's knowing your numbers, right? It's very important, especially when you're starting out.
Absolutely. Yeah. So there's 3 views of cash flow now. So we're going to discuss cash flow. If we can go to slide number 11, please, Alex. So let's look at 3 views of cash flow again. A cash conversion cycle, a cash flow diagram, and the Wired Cup's cash flow statement. Combined together, these 3 views provide a comprehensive overview of a cash flow system. A cash conversion cycle consists of 3 components. It's a business pays for raw material, the business makes a product or service using those materials, and the business sells products or services. The trick is really to know how long it will take to complete the cycle. The rate of conversion impacts how the cash flow is in your business. If you have a short cycle, you sell inventory or turn it back into cash quickly, which puts money back into the cash flow system. If you have a long cash conversion cycle, you will not be able to use that money while inventory is sitting on your shelves. If I can please go to screen 13. Oh, I'm sorry, I missed that one first. Sorry, okay. So another way to describe cash flow is with a diagram, and that's, if I can share with you slide 13, is the diagram. So this diagram is a representation. It's just a diagram for you to visualize, but we'll have another file for you to see that actually explains it better. But this diagram is just a representation of how cash flows in and out of the system. It depicts many decision points or valves that you control as the business owner. When you start business, money flows into the business via debt or equity. In the case of the Wired Cup, Bob had $30,000 of his own money invested in the business. The equity bucket in this diagram, in addition to Bob borrowed $20,000, which is the debt bucket. The combined $50,000 is available cash working capital. So the valves in this cash flow diagram represent decision points. Your decision impacts how the cash flow can increase or decrease your probability of success. Some valves are open all the time, such as sales tax and debt. We have to pay it. They are a constant drain on your cash, which is why they are on the bottom. Some valves are partially open, like the sales, the general, and the administrative valves. What you spend is up to you. As you spend available cash, the balance in the center tank drops. And then the inventory, you spend money on raw materials, labor, and other direct costs to produce a product to sell. Assuming you are producing a product, of course. The same principle applies for service as well. If you spend a lot on inventory, you tie up your money until you sell the inventory and turn it into cash. And then we have the fixed assets. The fixed assets are usually expensive, right? They're the buildings, the upgrade to space, vehicles, equipment, computers, technology. If you purchase an expensive fixed asset, it ties up cash. A better option may be to lease to keep the cash flowing. Sorry, was that a question? Okay. Then we have the profit generator, the sales pump, which is the best, right? In the top left corner, we have a sales pump. Keep this primed up to pump sales back into the system. Account receivables are what they also call as AR. You may make a sale, but not receive the cash until you collect it. Ultimately, you want to convert account receivables into cash. So it actually flows into the center tank and becomes available. Some account receivables will not be paid. This is called bad debt. So usually after 90 days, an AR will not be paid, and that's when it turns into bad debt. When you extend credit and create an accounts receivable, you need to follow up and make sure that you receive the payment on it. Then we have the accounts payable. The accounts payable is the center tank. Accounts payable, also known as AP, are represented by the bricks. This is money owed to vendors and suppliers who extend credit to you. For example, you receive a product or service, but you have not yet paid for it. You still have use of that money. The bricks elevate the water. Instead of having to pay for a product or service, you can usually use that money for marketing or paying any other bill. It is challenging to balance accounts payable and accounts receivables in the business. So you want customers to pay you as quickly as possible, right, which is the cash in, and you want to pay your vendors as slowly as possible, which is the cash out. Ultimately, you want to have and be generating excess cash flow from profitable operating, or what they call ECFPO. That's the excess cash flow from profitable operations. The shower head represents your paycheck. And the broken pipe represents how depreciation can be used to reduce your taxable income. We won't get into this right now in this class for time management issues. However, that's a good question to share with your accountant, depreciation. The diagram represents a cash flow system and decision points you control. Of course, in business, we would not use the diagram. We use a statement, which tells the story with the numbers now. So if we can move to slide 14, please. And you know, on this slide, it doesn't show a cash flow statement. If you have access to what Alex sent you, let me see if I can find it on another one.
Was it going to be the same cash flow statement that we're looking at earlier?
Yes.
It was? Okay. Let me look that one up.
On the workbook that we gave out, that would be page 10.
I have a question. In our business, we go from event to event. So we go and service a school, and there's all those pipes and all that water in and out and blah, blah, blah. But do you think, because we're a business that has cancer, you know, when you don't have a good, you know, cash flow and the guts of who we are is not on paper, Trish and I were talking about possibly every school find out what our profit and loss is for every school. So as we go along, we're going to, because this is all new to us, you know what I mean? It's like, I don't want to wait for a month. I want to do it every single event so that we can know what was the material cost, what was our this, what was our that. Is that something that's recommended when you're just learning this?
Absolutely. I definitely recommend having a cash flow statement because it's going to also tell you, I would do it before you even go into the events, because it's going to tell you how much of a paycheck you're going to get at the end of the event.
Right.
So sometimes, you know, it may make sense to take a project on, and other times it may not be. So when you have a cash flow statement, or at least prepare something to give you an idea of what the costs are going to be, is definitely something I recommend upfront.
And what is this sheet here?
This again is in your workbook that's Alex shared with you. And this is the cash flow statement. It's a valuable decision-making tool for business owners, investors, and creditors, really. It allows everyone to make smart, informed decisions about your business, about your own business. In this example, Bob made projections based on 2 months of actual experience in August and September. He does not know how much seasonality, summer vacations at the college, will affect his business. He assumes the impact will be significant, but he's not sure, right? So the first column lists money in categories such as loan receipts, owner's capital, and so on, and money out such as operating expenses for accounting, accounts payable, debt, advertising, and so on. The second column represents Bob's opening balance sheet startup costs. You would not typically see this on the cash flow statement, but we include this information just to demonstrate how elements of an opening balance sheet transfers over to the cash flow statement. The rest of the columns represent monthly income and expenses. As mentioned before, Bob has had 2 months of actual expenses based on what he knows so far only. He projected income and expenses for the rest of the year. Notice that Bob had $5,000 in available cash. His sales were $25,000 and sales tax was $1,563. A note about sales tax, though, I will share with you. Put this in a separate bank account. Do not commingle tax money in your regular bank account. You're collecting tax on behalf of the government. This is not your money to use. Most likely you will be required to pay this quarterly or even monthly to the government. Just one recommendation I make. In August, the Wired Cup had a total inflow of cash flow of $26,563, $25,000 of sales revenue plus $1,563 of sales tax. That means that at the end of August, Bob's total available cash was $31,563. If we actually just look at the bottom of the spreadsheet for August, we see that $29,253 was the cash outflow for the month. So some cash outflows are fixed month to month, such as Bob's lease payment of $1,350 and the cable internet payment of $200. Some cash outflows are variable, such as advertising and utilities. Variable amounts fluctuate from month to month. So you have some control over how cash flow in and out of your business is. For example, for sales, you decide what you will sell, where and to whom, how and at what price. The same goes for the expenses. You can also decide on what space to lease, how much debt to carry, when to advertise, when and how, raw materials to purchase, and how many staff to employ. In August, Bob has available cash flow of $31,563 and cash outflows of $29,253. The $31,563 minus $253 equals $23,009 in his bank account at the end of August. This $23,009 becomes the beginning balance for the month of September, and the process starts all over again month after month.
Looking like a budget, essentially. Huh?
Yes, yeah. And yeah, absolutely. In September, just briefly, the $23,009 plus the $27,000 plus the $1,688 equals $13,997 available for cash for the month of September. And then monthly expenses are 29,778, 30,997. So he has cash available at the end of September of $1,218, which becomes the beginning of, again, October.
I have
Any
a
questions
question.
on that?
Yes.
Sure.
So my nephew was, inputting all of our, numbers and everything. And then when I would look at some of the months, it was like a minus 1,600 or whatever. And he says, oh, don't worry. In the overall picture, you'll pick that up in this month and that month. So if you have a business that, is seasonal, you're going to expect to sometimes be in the rears, but you'll make it up on the months where you tripled and quadrupled your money, correct?
Yeah, I would say,
Uh,
yeah. Go ahead, Christine. Yeah.
Yes, go on, please, Alex. Yeah, because I have two opinions on that. My conservative side says you should really not spend it unless you have it, unless you're sure of it, right? And at that point, you can do maybe an equity line because you know for sure you're gonna have it. That's my conservative side.
Yeah.
Yeah, I like that viewpoint. What I would say, Jackie, is I'm glad you're thinking about the seasonality of your business, because that's real important. You're going to hear me talk about that a lot. So that's why we like talking projections. Even this, if you look at this cash flow, we look at projections. So you'll know that there's going to be certain months that are going to be busier than other months. But along with that, you want to make sure you're not overspending, right? So if you're already anticipating a low month, all right, well, my expenses have to be lower. And just start thinking about that, whatever it may be, whether it's spending less on materials, inventory, or utilities. Just be mindful of that. And yeah, ultimately, don't want to spend more than what you have, and you don't want to just hope. That's probably the biggest thing, is this anticipating, just kind of thinking, all right, well, I have a good feeling that these months are going to be good. No, you want to actually come up with some sort of projections and thinking about, this is realistically what I can expect, right? But at the same time, always being conservative with how you spend your money.
And then if you're a company that, like ours, that we weren't effectively really doing our profit and loss, could we go back with my nephew and to look at it maybe 2 years ago up to the present to kind of see? Because really, I have no idea. I really don't. I mean, of course, during the pandemic, that was an unusual time in history. But, when you're trying to bring yourself up to the level that you should be, I think we need to understand the history of, I mean, we need some transfusions for my company.
Yeah, I'll leave. I'll like to hear the banker's viewpoint.
Yeah, my thing, that, remember how I was telling you that it's a good idea to give yourself like a forecast what you expect, right, for your future business opportunity, and make sure that you spend wisely based on what you foresee. You could go back for the past 2 years so that you can really pretend, that real life forecast was real for you. So you can use it and see how your business was doing. And at that point, it's there, black and white again. You can see where you can cut back on if you need to, or where you can, know where you make profit, more profit than you thought, maybe, right?
Yeah.
Because it sounds like, and forgive me for saying this, but I don't know if you really knew it, like the net profit of your business, because, right, yeah. So yeah, it would be a good experience if you can do so, for sure.
Thank you.
Yeah.
Thank you.
Sure. So to sum up, really, Bob's business here, he's happy. The wire cup is doing well, but he's worried about the rest of the year, right? He projects he will be able to pay all of his financial obligations, but he will be cutting it close. Some business owners overestimate revenues and underestimate costs. And this means they will at some point have a cash flow crunch and will not have a cash available to meet their obligations. That's where I'm saying we got to really be conservative, of course, too. So to prevent this, consider developing a couple of cash flow statements. Best case scenario, this would be an ideal situation where all your dreams come true. And worst case scenario, this would be a much more conservative scenario where you do not get the sales revenue you would hope for and costs are higher. Most likely this would be like the Goldilocks story, not too hot, not too cold, but just right. And it is most likely scenario somewhere between best and worst case. In this example also, Bob created a most likely projection. Given that he knows the students and faculty leave for vacation, in July he projects a negative $4,316. You can't have a negative cash situation really in business, right? So negative cash means game is over. And that's where you gotta, what you want to achieve is excess cash flow from profitable operations. This is when you can shower yourself with some cash. So if we can turn to page 11, please. Oh, but that's on the workbook.
All right,
Yeah, okay.
this one. Oops.
So in businesses that are functioning in a healthy way, they have their deposits, they put a deposit for their taxes, then do they have an extra like line that says savings for the rainy day kind of thing?
You can categorize your different bank accounts. So businesses sometimes have separate bank accounts for payroll, for general purposes or general administrative costs. This one could be for taxes. So you can categorize it. The name of the business would obviously be the same, but you just like have a category to name it so that you know what that account is for.
And isn't
sorry.
there also a chance of double dipping? Like I make a deposit in the Navy account, but then I need some of that money. So then I have to go put it over to the Wells. I don't even know how he straightens all that out, to tell you the truth, but I don't want to do that anymore. I want to, fix it. But our accountant says you have to be careful that you don't commingle it and that, it doesn't look like you're getting more income than you really have, because maybe you've deposited $2,000 in one account. Then 2 months from then, you got to take that 2,000 and put it in another account. And then it looks like you made another 2,000. So it can get quite confusing sometimes.
So and that's where the cash flow and your P&L is going to come in place for you, right?
Mhm.
So the reason we're saying to open a separate account, for example, for taxes, because again, like as we said, this is something you've collected that does not belong to you. You're going to have to pay it. So whatever that is, you're putting it into that account right there. So you can't double dip into it. You don't want to go into it if you're short in your general purpose account, you don't want to go into it to borrow from.
Easy to say.
So, and at the end, we can also look at some options and discuss some alternatives as well that can be possible for situations where that it's where you're going to have a slow few months, like this particular business case. And I'm sorry, Alex, I said page 11 is page 15. I apologize.
All right, here we go.
Thank you so much. Thank
Sure.
you. So Bob needs to turn to some valves, right, that are wide open and turn down others in order to hold on to his cash as long as possible. If you were Bob's advisors, what would you advise him to do? How can Bob increase his sales revenue at Wired Up Cup? Or how could Bob negotiate a better deal or two with his vendors and suppliers? Maybe what Bob needs to do is plan for seasonal ups and downs in his business ahead of time as far as like cash flow. Or is it wise for Bob to use a credit card to offset cash flow?
Well,
Yes.
it's all wrong, I'm sure, but I would say that because I've never been able to get a loan from a bank, but I've always kept a credit card that was the emergency credit card if we needed money. So I would say that he should have a credit card that has whatever they've given him, whether it's 4,000, 7,000, 10,000. And that would be his emergency credit card for the business. And then he wouldn't have to pay it off right away, but he could make payments. That's coming from somebody who's done everything wrong. So that was probably the wrong answer. But I'm
But
just
it's an
giving you my
option.
opinion.
So
It's an option, right?
yeah, it is an option.
Yeah. If we can go to slide 16, we can also discuss some of the things that we can advise Bob to do. So note that some of the ideas we're all going through are all great ideas, right? So we have to be open-minded, think of alternatives to keep our business going, as long as we know, again, that it's going to be profitable, or otherwise we turn in the towel. So Bob can increase the flow of revenue into his business. He'll need to reduce outflow, perhaps by making arrangements with vendors or his landlord. If Bob pays his rent in 10 months, he will pay more during the 10 busy months and no rent in maybe July and August, where he promises to be slow, or he knows that he's going to be slow. So Bob might also cut back when he expects business to slow down. Perhaps his staff can work fewer hours, or he can cut back on menu items. The point is that by managing cash flow, Bob is able to control his business over the long term, and he can be strategic and plan ahead for it.
Instead of falling in the river, instead of falling in the river and going down.
Credit cards can be a big problem for businesses. Yeah. You know, honestly, the time that I would recommend credit card is maybe just knowing that this is the amount you have in the bank account, you're going to be able to pay. Because if you leave outstanding balances on credit cards at 21 or 25% interest rate, you will fall in the river. Yeah. So what do you, if we can go to slide 17, that's the advice that we do not want Bob to do. So never use your sales tax as financing option. That's going to have to be paid. Some business owners use sales tax and cash crunching, hoping they replace the tax when things look up. That's a risky bet. Penalties are high for not paying taxes on time as well. So if you anticipate that you might miss or be late on the late payment, talk to your loan officer as soon as you know so. Loan officers understand cash flow and typical business challenges. It is in their interest to help. So we don't want loans to default. They don't want to see you fail either. So they make money when you are successful and pay back the principal and loan interest. Do not pay vendors late. They can cut off the supply. Do not overestimate revenue. This is a common mistake many new business owners tend to make. And do not underestimate costs. Again, this is a common mistake in startup businesses. Do your homework to find out the real cost of doing business. And if I may share slide 18. This is the one thing that I always recommend. It is professional to ask for help. It's not a sign of weakness if financial management is new for you. Find a great accountant or a technical advisor who can explain cash flow in ways that relate to the concept to your own business. An accountant will encourage you to use a computer to manage your cash flow documentation. If you do not already use financial management software, take a course to develop this skill. You also need to manage your paperwork in a professional manner. Set up a reliable filing system to keep track of all the financial documents such as tax forms, receipts, invoices, and so on.
What is that? Can you, a 5/8 system?
Can I what? I'm sorry?
What, can you explain 5/8 system? Or maybe I misunderstood you.
Oh, filing system.
Oh, filing system.
Yeah, yes, I apologize. Yeah, set up a filing system, a reliable filing system that really just keeps track of all your financial documents. And then competitors can be good advisors as they cope with the same cash flow issues you do. So find ways to cooperate and share information with them. They have experience to share as well. And if you're going through in your niche of your business, if you're going through something, I'm sure other businesses in the same niche are as well. And some have learned to overcome it, and some you may be able to learn from. So check out the toolkit for resources in your workbook for ideas about where to locate technical assistance. So I'm just going to go over some key points to remember. If I can go to slide 19, please, Alex. So managing cash flow is a core competency of a small business ownership. A balance sheet tells a compelling story. Cash flow statement continues that story. Use it to monitor projected and actual income and expenses. So plan for seasonal fluctuations. Every business has ups and downs. Ask some of your competitors when their usual slow times tend to occur. Try to maintain a rapid cash conversion cycle. Try not to tie up too much cash in inventory. Lease equipment instead of buying it. If you do buy equipment, buy used whenever you can. Manage your paperwork like a pro. Your accountant will expect to see spreadsheets. An accountant program will organize receipts, invoices, and financial statements, such as banking and credit card statements. And when you are ready to get a business loan, they will need that as well. So ask an accountant for advice. Ideally, this class has helped you prepare for a series of helpful conversation with your accountant, other colleagues in the same business as you are as well.
Are colleagues more likely to help you though? It doesn't seem like I don't know.
Again,
that doesn't seem like the reality of business. I mean, it's a great idea, but I don't know whether.
Say you find someone to collaborate with, right? In terms of like the entrepreneur community, if you find a way to kind of, because you might find someone within a similar field or industry that they specialize in one item, and even though your business is similar, they prefer to not do something that you might offer. And there's always ways to collaborate, and some people are open. Some people just like to talk about their business and like to help out others, and some are cutthroat. Some don't want to help you at all.
I'm sorry. What I'll share with you is I've seen that successful business owners do want to share their success stories and share their experiences. So that's who you really want to reach out to, right?
Mm-hmm.
I mean, when I go visit business customers, they're proud of their business. They're proud of what they accomplish, and they want me to know it. So at the back of your book, there's some toolkits that are available for you. There's a glossary of common cash flow terms, a sample of a cash flow template. There's tips for negotiating better terms with customers, vendors, and suppliers, and landlords. Now, a list of great resources where you can get more information. Many of these are free or very inexpensive. And those are, like Alex had mentioned earlier, those are the ones that I would recommend going to first. Can I answer any questions?
I have a question.
Sure.
Okay, my name's Angelica.
Hey, Angelica.
So I know that we're talking about like the cash flow statements and stuff. And I guess for me, one of my goals, or at least not my goal, but I currently use my small business as an extra source of income. So I was kind of wondering, like, when we look at the cash balance and it rolls over into the next month, like, when is it appropriate, I guess, to use that money for yourself? Like to pay for my bills, not the small business bills.
Yeah. So it's a good, in my opinion, it's a good source to have 6 months of your business expenses in that business account before you start taking money out of it.
Okay.
Wow.
I would relate that also just in your personal life. When you're going to go buy a home, the bank also asks to see that you have 6 months of a mortgage and or your monthly expenses in a savings account. And I recommend the same thing for a business as well. If you were to consider a business line of credit or loan, they would probably recommend or want to see 6 months as well.
That's good enough.
Christine, I have a question.
Sure.
Let's say I'm going to be 18 years old. I'm a boy. I want to start a tattoo business.
I've been making sales. I'm tattooing people. He's keeping track of all his sales. He's scanning all his items. He has an itemized of everything. How would he go about getting a line of credit if he has literally no credit and he's keeping track of all his cash?
I will tell you, it will be difficult to do so. And
Mhm.
one of the things is if he has reserve and a savings account, one of the
Mhm.
ways that I would recommend getting credit established is starting off either by adding his name to a parent or an adult that already has business established. That's how I started off my young boys credit.
Okay.
And or to do a secured credit card. So secured credit cards work such as that you put $5,000 in a bank account that the bank controls. And after 9 months to 12 months, after he makes consistent monthly payments on a regular basis and not late, they usually release that security. And in the meantime, that's building credit for him. So on the credit report, it doesn't necessarily show that it's a secured card.
Now that considering it's a secured credit card, does his mom need to sign for that? Or can
No.
he just get it on his own?
He
Considering
can
he's
get
gonna
it on
be
his
18?
own.
Okay.
He can get it on his own.
Does he have to wait till he's 18 or he'll
No.
be 18 in September? He
No.
can do it now?
He can do it now.
Okay, does he need to show his business plan of his tattoo business to get that, or can he just
No.
apply for
No,
it?
the secured credit card is just his, I mean, you go in, you give them the amount that you want, and they
Okay.
usually give you 100% access to the amount that you put in there as security. Because again, you're putting that money
Right.
as protection. In the event that he doesn't pay, they have that money to access.
Okay, okay, thank you so much.
The other thing, of course, and the other thing is, again, if he has a parent that would be willing to add his name to a credit card, that's another way that he can start building his own credit.
Okay, thank you.
And then I get the first tattoo for free.
Yeah, well, I teach entrepreneurship, and I have a kid who, that's what I teach, and they do a Google site, and they keep track of, I mean, everything you're saying, you're kind of validating what I'm doing, so it's kind of nice to know that I'm doing the right thing. But I have them like scan all the receipts, they document literally everything. So
Yeah,
I kind
good
of
for
want to
them.
connect with you if I can, to have you come in my classroom
Absolutely.
and
Oh,
go
I would
over all
love
this
that.
stuff. But, okay, that'd be
That
great.
to me
Thank
makes
you.
my job even better. Like when I can go to young, teenagers and teach them about finance, and I'd rather them save to buy a house than to buy a car or a $200 pair of shoes or something. So I would absolutely love that to help them build
Yeah,
themselves.
and I know somebody made a comment about they should be teaching financial stuff with credit scores, and I totally agree. I teach them through their GPAs. So I say, kind of, what are your grades in class, and let's compare it to your credit score. And
That's
we
right.
do a whole activity on that. So yeah, I would love to connect with you if we can.
Well, if I know this is a little bit off subject, but I'll share with you that even today, banks, if you're even applying for a job, they look at your credit score because they want to know how responsible you are. So credit shows who you are. It is your entity. It's your identity.
That's what I tell them. Yep.
Yeah. So it's a wonderful thing. You got to be very careful. Please, and Alex,
Yes.
if it's okay with you, you're more than welcome to share my phone number with the group, and I'd be happy to help anybody that I can answer any questions to or connect to or go teach in the class.
Awesome.
I'll
Thank you so
definitely
much.
share an email. Definitely.
Okay,
Sure.
thank you.
Thank you for that.
Yeah, of course.
But I know we're at
Any other questions?
5:02, but yeah, I want to see if there's any more questions for Christine before we wrap up.
I have a question. If, okay, so a bank is looking, in order to get a bank loan, you've got to have cash in the bank for 6 months. I mean, like if you have to have money in your savings, correct? And you have to have a pretty adequate history. I mean, you may not have a 700, score, you might have 697 or something, but what are the 3 most important things that a bank is looking for to give you a loan?
So they look at it and they call it the 3 C's. It's your credit, your collateral, and your ability to repay. So your credit is your credit score. Your collateral is if you have something, a house, a building, a car, whatever equipment that we can use as collateral. and then your ability to pay, so your income. And that's the reason why 6 months in your bank account is a good amount to have in order for them to see your ability to repay.
Thank you. I didn't even know there were 3 C's. That's good, 3 C's.
All right.
This
Well,
has been marvelous. I'm telling you, I just love it. I thank you so much. I feel like
My
there's
pleasure.
hope. There's
It's
hope.
my pleasure. It's my pleasure. You know, I enjoy it more than anyone. So I enjoy sharing my knowledge again. Like I said, coming out of high school, I got myself in trouble, and my drive is to teach others today, you know, how I can help them if I can. So thank you. Thank you.
well, great. On that note, again, thank you so much, Christine, for
my
being
pleasure.
and supporting us on this and informing all these small business owners and entrepreneurs about this topic. It's very important.
My pleasure.
And also touching on credit too, because credit is also very important. So, and it's
Yes,
very,
yes.
you know, crucial for your cash flow as well. So I appreciate your time. And for all of you who attended today, you will get an email with Christine's contact info, along with the recording on this workshop today. And I'll also include the workbook in case you didn't receive it. One other thing I'm going to add, I know there's a statement, a cash flow statement template on the workbook or inside a workbook, but I will include an electronic one too. SCORE is a good resource for those of you who are not familiar. So score.org. They have a lot of templates, and they have webinars and stuff too, but I like their template section. I'll include one of those on there as well, so you can at least kind of get used to what a cash flow looks like, how to fill one out. You can kind of, you know, play around with it and experiment with it, but also include that as well too. But other than that, again, Christine, thank you so much for participating. Thank you all
My
for
pleasure.
attending, and enjoy the rest of your day. All right.
Thank you.
Take care,
Thank you
everyone.
very much. Thanks a lot.
Thank
Have a
you,
good day,
guys.
everyone.
you.
My pleasure.
Bye.
Bye-bye.